Hello, I'm Peter Towers, Managing Director and founder of ESS BIZTOOLS. Welcome to the ESS BIZTOOLS podcast. Today we're going to be looking at smart pricing strategies, the key to SME profitability. Profitability is very important for all of our small business clients. And in the difficult trading circumstances that most of our clients are operating in at present, this becomes more pronounced, doesn't it? So the pressure is on our clients to remain competitive. They want to win work and charge for it, but they need to be trading at a profit. You can assist them. I don't think the accountant's role is to be an historian, recording past events, a year, 18 months, sometimes nearly 2 years after the financial year commenced, when we might prepare an annual set of accounts together with the income tax return. That's a historian's role. What we have to do if we're going to be supplying real advisory services, being the trusted advisor, is to be there day by day with the events as they occur, but even before then, because clients need strategies, they need business plans prepared, and they may need key performance indicators, budgets, key drivers, cash flow forecasts, projected balance sheets. They need all that information so that they've got an assurance deep down in their stomachs that this strategy looks like it can be achieved, that they've subjected it to all sorts of evaluation before they've started on this business journey that they're on. Unfortunately, that's not the process, is it? And this week there's been some debate on Accountants Daily about how successful accountants are in being the trusted advisor. And I think you might be surprised at the results, especially when you read the feedback from SMEs as to what they think of services. Overall, they're happy with the taxation advice, but many of them were critical about the lack of advice they receive from accountants performing a real accounting role, helping them day by day, week by week. I think it's something that as a profession we need to look at a lot more closely. So how do your clients set their charge out rates? That's an interesting question. And over the years, I've asked many SMEs, as an accountant, as a consultant, as an advisor to a major Australian government grant program called COMET, Commercialising Emerging Technology. And I rarely got an answer that I'd sat down with my accountant and we went through and worked out all the costs and we determined the profit and added that into it, and then a calculation was prepared and we did a proof of that. And I understood that if I produced those hours and achieved the productivity percentages that had been factored in and kept the overhead expenses to what had been budgeted, that at the end of the day, we would earn the profit. I never heard that at all. Why not? Why didn't I hear that? I think it illustrates that accountants are not supplying the valued advisor services, the services that the now retired tax commissioner, Chris Jordan, who was a former partner of KPMG, recommended, nearly pleaded with accountants at the Xerocon 2022 conference that accountants had to offer a trusted advisor service. Now, surely there's not much that's more important if you're going to be the trusted advisor than to helping your client to actually set prices and set strategies that will achieve a reasonable profit target for the year, and then help them in the week by week, month by month monitoring of the actual performance back against that budget, and then being able to assist them with reviews as to what went wrong and to decide whether the model needs a change. It was wrong. What was wrong? It's got to be changed. But just let's think about what really happens because of this emphasis on the accountant's role being to provide a tax return. The tax return doesn't help your clients survive in business. It doesn't help them make their profit target. Why? It's too late. It is too late. At the very earliest, it's going to be 2 to 3 months after the end of the financial year before you have an annual set of accounts and the tax return. I don't know what the tax return's got to do with helping the clients run their business, but nevertheless, that's the process. That's what the client's been charged for. At the very best, 2 months after the end of the financial year, they might receive that information. But they've been trading in that year from 14 months ago. How do we know that something didn't go wrong in week one? And that's caused problems throughout, because the problems may have been a mathematical miscalculation that's just been factored into the system, and everyone's just worked on accordingly. How many of your clients actually calculate their gross profit percentage each week if they're a retailer? You could calculate it for them, and if they were a larger business and they had an employed accountant, I can nearly guarantee you that it would be getting calculated. But in a vast majority of SMEs that don't have an employed full-time accountant, I'd be very doubtful that they're getting that information. And if we want any further proof that the system's not working, just look at the Ombudsman's reports on the failure rate of small business at all-time high levels. There's something wrong in the system. And I think accountants bear a fair bit of the responsibility for that. Your clients are getting no information, no key performance indicators, no guidance, no comparison of actual against budget, if they've got a budget, from the tax return process. So we need to be helping them to avoid the guesswork, not to base their charge out rates on a figure that they heard that one of their competitors is charging. Do they understand whether their competitor's making money or achieving their dreams and aspirations in any case? If your client's undercharging because they've got no understanding of all of the costs and the productivity percentages for the team members, the markup on external purchases they make for clients, the overhead expenses, the realistic profit built into it, if they've got no idea how that all fits together, it is guesswork. And if they end up in front, it's pure luck. So businesses work very hard to generate profits. They need our assistance. It's as if we, as a profession, only attend to about what I think is about 15 to 20% of the job. That's the taxation advice and the tax return. And if you disagree, I'd like to have a conversation with you. We could run a podcast where we discuss the issue, because I think it's important. I think it's important that accountants face the reality. We've got the computers now. We've got the software. We've got the communications. You can run a Zoom meeting for your clients. So you can be acting for clients no matter where they are in Australia or New Zealand or indeed the world. Just that the time zones might muck around with your sleep a bit. But you can do that. So charge out rates matter because they're affecting the whole tone of the business, how everything's running. And your clients need other assistance as well. It's not just the accounting either. They need marketing assistance, creating marketing strategies, and then how to implement, how to communicate, how to use social media, how to use direct communications. If they're on LinkedIn, how to utilize the LinkedIn membership to introduce themselves in a realistic, business-like manner to other people. And they will need your assistance to do that. So they need tools that take the guesswork out of setting prices. And ESS BIZTOOLS has these. We've developed them some years ago. We've got spreadsheets. They are originally based on some work that was done by the Financial Management Research Centre 40-odd years ago. We developed it into a spreadsheet to speed up the calculations, of course. But it was developed many years ago. So we have one for trades, which is what I'm alluding to. Because trades are basically selling time, their employee time, but they're also potentially earning a margin on purchases they make on behalf of their clients. So that needs to be factored in. And then the big question is, what do they do with what I call the super profit? Is it a super profit they really want to keep separately so they can invest it in their own superannuation? Or are they going to use it to subsidise the labour charge-out rates? For argument's sake, if they spend $1 million in the year on purchasing goods for their clients, so they've got to arrange them. They probably got to have someone go and inspect, decide exactly what they want to fit into that house that they're erecting. What about the time that's spent? It comes through on your client's credit card. They're going to get paid by their client. At times, unfortunately, there's delays in some of those payments. Who's wearing that cost? So I think they're very much entitled to charge a markup on those purchases. If their client doesn't like it, they can go and buy their own furniture or paint or floor coverings or whatever else. Select the windows. It's a service that they're making available to their client. But then what do they do with that in the calculations? Are the overhead costs realistic in their calculations? And have they decided on a profit margin? And then do the calculations compute? Is there a proof sheet prepared so that you can sit down with your client and explain to them, here's the team members. Oh, and one of the big costs that we include is the labour on cost, somewhere between 18 and 23, maybe 24% of the wages or salaries gross cost. And people forget it. When I talk to business people, I say, well, if you factored in the on costs, the labour on costs, the what? Well, you've heard of superannuation. Well, it's now 12%. Oh, yeah, that's right. And workers' comp, provision for long service leave, sure. People are going to be there for a few years, but it's a cost that's building up. Wouldn't it be nice to be earning that and putting it into a separate bank account so that in 10 years' time or whenever the payment can be made, has to be made, you've got some cash to do it with? And what we're talking about for tradies is an exact system which we have for professional services, basically the same. In a lot of professional service firms, though, whether it's medical practitioners, physiotherapists, there can be a whole range of extra products that they're buying in and selling. Well, you just build that into the calculations. Are they going to sell $1 million worth of other products? And are they going to mark them up by 50%? So they should be earning a 33 1/3% gross profit percentage. They can factor that in quite easy. So that the owners or the directors can then sit down and look at the resulting forecast, which you've got on a nice spreadsheet, and be able to understand it. and say, well, okay, what happens when we make a change here? Well, you make it and it's reflected in 2 or 3 other documents, but they can see the effect. And they say, yeah, that's for me. And one of the others which we've mentioned in the material for this particular presentation is the retail or wholesalers. Now, they're different. They're not selling their labour. They've got plenty of labour employed in their businesses. They couldn't operate without it. But their challenge is a little bit different. Their challenge is that they have to have a range of stock. And they need, first of all, to understand the categories the stock falls in. Is it a star? Now, a star is high volume and high markups. That's what every retailer dreams of, only having that in their store. But I'm told it doesn't happen very often. I haven't struck anyone that tells me 100% of their sales are star items. In most of the situations, they then have cash cows, products that are also high volume in sales, but low markups. And they need to have them. But they need some input from you at times to say, well, don't have the cash cows all sitting at the front cash register counter, as I've observed over the years. In fact, I said to a guy who I knew I used to play football with, and I said to him one day, why have you got these products here, which were the newspapers, the bread, and a few other things, which are cash cows? They're high volume, but not much markup. Why have you got them stuck here at the cash register? Oh, it's easier for me. I know where they are and I can watch them, and they don't want to waste time. I said, be blowed at them wasting time. You want them to wander around your shop to find them. It shouldn't really be a secret hunt to find the cash cow items. You tell them the bread's there or the papers are there and move it around a bit. Because what the strategy is, I'm told by very experienced retailers, is that wherever a cash cow item is, you put a star item alongside it. So when they go looking for that newspaper or the bread or whatever the other cash cows are, and the client needs to know, you need to know as the advisor, what are the cash cows in their business? And be raising these concepts with them. Running a business is very lonely. And we've got to remember that a lot of people start a business with no real background in the business. They've worked somewhere else for 30 years. Someone else has been making all the management decisions. And even if they've been the managing director of an ex-public company, which I've had a couple of those experiences over the years and found that they really don't understand a lot of this in any case because it was done by an accountant for them in their previous life. They were great salespeople or great marketers or great entertainers. But when it comes to the nitty-gritty of really working out the pricing and then when things were going to be placed in the stores, they didn't do it properly. This is why you've got to really get into the role of being this key advisor to your clients to understand what's going on. In my career, I spent 12 years in the meat industry. I knew nothing about, I knew what a rump steak tasted like. I wasn't very good at cooking them. But I had to find out how the industry worked. And it went from going out with the livestock buyers, walking through a paddock with 200 or 300 cattle in there. Very terrifying. And first time, second time, third time. I only did it 4 times. But that was to try to learn what went on, how they went about it, how they negotiated with the graziers they were buying the cattle or the sheep or whatever from. And then understanding the process. You need to be doing something similar if you're going to be a key advisor to your clients so you understand what they're going through. So you can give them input, that they know you've put some extra yards into it to understand it. So back to our retailers or wholesalers. They know they've got some other stock which can be problem mines. They were last year's specials. All the ladies wore red last year. Well, they won't be wearing red this year. They're probably wearing yellow or green or something different. And trying to get rid of that clothing that was in last year's fashion can be very difficult. So it's a problem mine. It was a star. It's now getting marked down to sell it. And then you got the absolute disasters. No one owns up to having ever purchased them, but everyone has them. And you make sure your clients understand that the automatic reorder on a computer system can cause havoc. I was in one of my accounting clients who owned a string of businesses in the jewelry industry one day, and I heard a commotion outside. Bit of fiery language. And I walked out to see what was going on. I was in the boardroom, I walked outside. And the guy who was letting fire with the language was a mate of mine. That's why Bobby walked out. I recognised his voice. And I said, "What's wrong, Jim?" And he said, "It has taken us 2.5 years to get rid of these horrible big vases," they were, apparently, that we had to sell at some exorbitant price. We finally got rid of them. And I came in here today and there's another 24 of them turned up. He was not a happy man. And when we investigate, so he's blaming the stock control officer. And what had happened is there had been an automatic reorder put into the computer system. And when they got down to only 4 left or something, it reordered another 24. So you need to make sure that your client's aware of this, or you're, as the accountant, have got an overview of that and making sure people can fix it, because that causes problems in a business. And if they got stock like that, they've then got to discount and discount and discount to get rid of it. They're not going to make a profit. So your role as the profit partner is to not just think about improving the numbers, it's to think about the business focus, to understand these other issues. And I'm sure you can tell me a whole stack of stories also. But you will improve your storytelling ability if you've actually been working with your clients to help them overcome these hurdles of running a business. Because in a larger corporation, accountants in 2025 are not just people sitting locked away in an office with a pen and a piece of paper working out formulas and doing journal entries. What I found in my role was you need to have your brain in gear and be looking at a whole range of issues, costings, what ifs. Could we do it something else? What's the currency going to do if you're an exporter or an importer? Do we need to make special arrangements? What happens if there's a shipping strike and you've got products in your cold stores that's ready for export and you can't move? Have you got alternative financial arrangements in mind? What's the cash flow forecast telling you is going to happen? What's the debtors days outstanding? You did your budgets on 35 days. Did you know it's now up to 51 days? What's happened? What's gone wrong? Now, this is all what can happen in a business during a year. And the traditional way for accountants handling small businesses in Australia is basically to look at all this once a year. And I've struck accountant after accountant who tells me they don't look at the key performance indicator. One guy told me when I asked him, did he know that their client had 102 days as the debtors days outstanding figure? Because I calculated it. And he said, "No, I didn't know it was that high, Pete. But it wasn't my role. My role was to prepare the accounts and the tax return." I knew he fell over in amazement. And I was not impressed. I would not refer anything to that accountant. So the challenge that we've all got in supplying key advisory services, being the trusted advisor that we talk about, and a lot of accountants say they are. I don't think you're a trusted advisor unless you're undertaking the sort of services that I've been referring to today. And I'm sorry if that's not going to make you very happy. And if you want to talk to me about it, I'm happy to talk to you about it, because I think it's a huge problem. Have a look at the information that was contained in a special article on Accountants Daily. I meant to have it here at my fingertip. It's on my table, but I've got a lot of other things here at present. And in fact, I've just got it. The 19th of August this year, only a few days ago, accountants not seen as strategic partners by small, medium-sized businesses. I'll repeat the heading: accountants not seen as strategic partners by small, medium businesses. While accountants may wish to become key strategic advisors for their clients, very few small, medium businesses see their accounting professionals in such light. New research shows. Now, I'm going to be presenting a special webinar and podcast on the results of this survey and some of the subsequent material. Accountants Daily today, the 26th of August, have published some articles and comments, including comments from me and a couple of my affiliates, about this whole question: are accountants providing the key advisory services that entitle us to say that we are the key advisor to SMEs? The research from this particular article and the others that have been referred to on Accountants Daily today don't support that. Now, I know some of you are, and that is great. Congratulations. But we, as an industry that takes itself very seriously, have an enormous challenge in front of us to make sure that these advisory services are really distributed. I hope that you would be inclined to find out more about this whole journey. We have a webinar which is looking at the tradie charge out rate calculator and the professional service firm calculator on Thursday, 28th of August at 11 a.m. AEST. To register, please go to www.essbiztools.com.au, click on webinars and register. And I look forward to hearing from you. Stay safe. Have a great day. Goodbye.